Why are BRICS loading up on so much gold? Well, because the dollar system is going the way of the dodo bird, the dollar payment system, for that matter. And we saw over the weekend that President Trump was able to help BRICS. How did he do that? Well, the relationship between the US and India went down the drain. So now India and China are new buddies. They're part of BRICS, but it was always a little difficult relationship. So that's going to accelerate things even more in terms of countries loading up on gold and using the dollar less and less.
India is increasingly leaning on gold to strengthen its foreign exchange reserves while trimming its exposure to US Treasury bills, according to a report by the Economic Times. Fresh data from the Reserve Bank of India and the US Treasury Department show a shift in preference that reflects a global move away from heavy reliance on the US dollar. In A Pocketbook of Gold, a survival manual for monetary mayhem, the authors described gold as the ultimate form of international payment. MarioInnecco emphasizes that wisdom is now unfolding in real time. As BRICS nations stockpile gold, US sanctions on India are backfiring, pushing them closer to a new, non-dollar payment system with China. The world is watching a geopolitical shift predicted in a gold manual. According to some reports, Indian households may hold more than 25,000 tons of gold, which exceeds the combined reserves of the top 10 central banks worldwide. Meanwhile, in China, both institutional and retail investors have been actively buying and holding gold over the past 15 years. In the short term, relations are likely to continue to improve. India recognizes that it cannot achieve its economic development aspirations without cooperation with China, one of its key trade partners, and tensions between India and the US, due to the Trump administration's 50% reciprocal tariffs, make reaching out to Beijing even more urgent. As the old saying goes, he who has the gold makes the rules. The real reason gold is rising right now is that bond investors and pension funds are realizing they will be repaid in a currency with far less purchasing power. According to economic forecaster Martin Armstrong, currency devaluation is a hidden tax that strips away purchasing power. In a recent outlook, Innecco mentions that soaring monetary aggregates, such as M2, are a direct signal of currency debasement. While debt burdens grow, what once appeared as wealth is being reset downward through inflation and devaluation. Before we dive into MarioInnecco's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I told you I've got good news about A Pocketbook of Gold. So yeah, A Pocketbook of Gold, a survival manual for monetary mayhem, and I think we're right in it. And it's great that I've got the news for you. And it was written by Jim Sinclair, who unfortunately passed away a couple of years ago now, or maybe a year and a half ago, and Peter Carlin, who I never really knew who he was. And about 6 weeks ago, I was contacted by Peter Carlin, of all people, and he watches the channel because he's seen that I talk a lot about this book. And this book, of course, was published back in 2010, 2011, don't know exactly the year. And I bought it off Jim Sinclair's blog, JS Mindset. I don't know how much I paid for it, 20 or 30 pounds. And it's become really popular. The only problem is that they didn't publish that many. And now they're like worth hundreds of dollars. I'm not sure how much it will cost to buy one, maybe on eBay. But as I said, Peter Carlin contacted me, and the good news is that they're gonna do a second edition. They're gonna publish more of these, and you'll be able to buy it. And he also wants to come on the channel for an interview, and that will be great. And talking about this book, I want to talk about chapter 2 here because it's very relevant to what's going on here. Chapter 2 is a part where they talk about what is gold. Well, the first part of the chapter is gold is the ultimate form of international payment. Well, we're seeing that, aren't we? Why are BRICS loading up on so much gold? Well, because the dollar system is going the way of the dodo bird, the dollar payment system, for that matter. And we saw over the weekend that President Trump was able to help BRICS. How did he do that? Well, the relationship between the US and India went down the drain. So now India and China are new buddies. They're part of BRICS, but it was always a little difficult relationship. So that's going to accelerate things even more in terms of countries loading up on gold and using the dollar less and less. Second part is gold is a barometer of fear and confidence, not inflation. Well, that's true as well. There's a lot of fear right now. And the confidence in the system is buckling, I would say. Gold is a measure of geopolitical power. Well, yeah, he who has the gold makes the rules, right? It looks like that's shifting, well, in relative terms, a lot more away from the United States to the BRICS. Am I for the BRICS? No, I'm just trying to tell you what's going on so that you can protect yourself, hopefully financially. This is a really good one too here because we're seeing this and we're talking about this, right? Gold is a measure of government debt and the ability, willingness to repay such debt. Well, there you go. One of the reasons gold is going up now is because bond investors and Dutch pension fund managers realize that wealth that was taken for granted suddenly appears ephemeral. And I think that's what gold and silver are warning us. And it's also warning us that the central bankers and governments, they're not going to allow for the deflation in fiat currency because they're fighting for survival. So what gold and silver are going to do, they're going to reveal what real wealth is. The amount of currency which one bought certain things no longer does, but wages have not risen along with prices. Yeah, we know all about that too. Instead of wealth, citizens get saddled with a big chunk of government debt, i.e. debt created by mismanagement. The result is everyone pays for more for food, fuel, and other basic necessities. Government passes on the mismanagement of economic affairs to its citizenry by devaluation. As the imprisoner money manager Martin Armstrong has artfully stated, and I quote Martin Armstrong, the decline in the value of a currency is in reality a free market tax taking away wealth that is overstated. So currency can also be an indirect tax to compensate for the poor management of the state, end quotes. The corresponding rise in gold, especially when it is a global phenomenon, and it is, gold is going up in all currencies and making new highs as well. As it is now, is in effect a devaluation of all the world's currencies and the restatement of wealth on a global scale. As is both presently and historically evident, the attempt to restate wealth to a lower level becomes a competitive event in its own right, as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. That's what it's all about, indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the 9th nation to do so in a 3-year period. Falsely stated and assumed wealth, largely created out of the assumption of debts that can not be borne, must eventually reset at a lower level. Populations bear the restatement of wealth through the expansion of monetary aggregates. Look at M2, real inflation. It's making new highs. It's really taking off. Look at the chart. And what this expansion of the monetary aggregate does, it causes the devaluing of national currency that denominates their wealth. This happens to all currency holders, regardless if they personally assumed any debt. Gold rises because gold is a monetary proxy proxy inversely related to a nation's currency. And that's what a lot of people don't understand out there. They think it's just a commodity, but it's not. Yes, it's a commodity, but it's a monetary one. The burden of indebtedness is reduced along with the standard of living. Commodity prices increase. Debt deflation has become currency inflation. They are one. So there you go.
Gold price action today bears a striking resemblance to the volatility of the 1980s. Back then, inflation ran rampant, interest rates soared, and geopolitical uncertainty loomed large. All elements we're once again seeing in 2025. The big question remains, will the gold price repeat history or carve a new path? Market expert MarioInnecco states that after 50 years of a fiat system, your wealth is an illusion. When measured in terms of precious metals, massive deflation is already underway, which explains the economic unrest across the West. Central bankers despise gold because it cannot be created out of thin air. However, history shows that all fiat currencies eventually collapse to zero. True wealth is tangible, and it's not too late to exit the system. The United States dollar is experiencing its worst start to a year in more than 5 decades, which is likely to trigger a price hike for some everyday items and a jump in expenses faced by travelers abroad. The greenback has fallen more than 10% in value this year, relative to a group of foreign currencies that belong to top US trading partners. Let's get back to the interview.
Incredibly, we've had over 50 years of this IOU nothings system or fiat currency system, fraudulent system that they've been able to inflate massively, of course. And there are many out there that see a deflation. Well, we're already having a deflation in terms of real money, in terms of gold. I suggest you go to tradingview.com or any other charting system and measure a lot of assets versus gold and even silver to some extent to see how they're not doing really well against the real money. And it's one of the reasons why the economies, at least for the bottom 90%, especially the bottom 50% in the West, is in such dire straits, and that's why there's so much political and social upheaval all around the world. I noticed that in Indonesia, they're having riots because MPs there voted for a $3,000 pay rise, not a year, a month. And I think that's coming to the West as well, that kind of protest. So before I go further into why gold and silver are showing us that the central banking emperors have no clothes, just wanted to tell you that I don't think it's too late to get out of Dodge. And what does that mean? Well, get out of fiat currencies. I've been warning even before I started this channel since 06, 07 that all fiat currencies would sink because historically, they all go to zero, and the dollar and the pound and the euro are no exceptions. That's why I love history. We need to know what happened in the past to try to forecast what's going to happen in the future. So, yeah, that's what's going on, and it's not surprising. It's taken a while, of course, but they've been able to drag on this system for a long time, mainly because it's become a global racket. It's not just one country doing it, it's the whole world, all the major economies. But yeah, what I wanted to let you know is that you can still exchange your fiat for gold and silver, and the purpose of my channel is not to sell gold and silver. It was never that. It's still to warn people about the system and how your savings are not safe in fiat currency. But I've always had the question, where can I buy gold and silver? Because I've been stacking since 02. For some reason, I decided to diversify from my pension, and I bought some Krugerrands, and I started looking down the rabbit hole. So a lot of you have asked me, and I've told you, do your due diligence, do your homework, find the most reputable dealer. And have you noticed that central banking headquarters are massive buildings, classical buildings, Renaissance buildings? And why is that? Well, because it's the only thing that gives them credibility. Can you imagine? Because they could do the job that they do from a little office like in South Dakota somewhere. They just need a Zoom and some telephones, but that doesn't look credible, does it? So they have to have huge buildings. We saw the renovation cost billions in Washington, D.C. Have a look at Google, New York Fed, Liberty Street, and look at their building. It looks like a Renaissance building from Florence and the Medici. And that's what it's all about. It's all about like fooling people and management of perception. But the only thing that really exposes central bankers and the fraudulent or counterfeit currency and credit that they create out of nothing, the only things that expose that are real money, i.e. gold and silver, physical gold and silver. And that's why they've always been so defensive about gold. Even Paul Volcker, he admitted that gold is the enemy of the central banker because gold is real money. It can't be conjured up out of thin air. It can't be written on a ledger out of nothing or typed on a computer out of nothing. It's God's money. Gold and silver are God's money. It's in the earth, or running through rivers, and you got to work for it. And it's not easy to find. And for some reason, it has been chosen through the millennia as money. And it's difficult to really explain why, but that's what humans have done. And that's why I recommend you read this book by Murray Rothbard. He talks all about the history and all about money.
As BRICS nations accelerate their gold accumulation, the cracks in the US-centric monetary order grow wider. What makes the bull case for gold rather intriguing, and why we think the next move in prices will be higher and not lower, is that the stars are aligning for the traditional drivers to now take over, at a time when uncertainty remains elevated and central bank demand is likely to continue. If gold is reclaiming its role as the foundation of global finance, are you preparing your wealth strategy for a future where trust shifts from paper promises back to real money? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos.